Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're talking about the hospitality industry. My guests are Mark Woodworth and Jack Corgel. They're with PKF-CBRE Hotels. And gentlemen, you talked about how great it's been. I mean, we have record occupancy. We have increasing rental rates. We have really good news in the industry. Seems like everywhere is what you're saying. So what about new supply? That surely means that there's a lot of new supply coming online, that it's time to build. What do you see?
In certain markets, there are, in fact, lots of new supply. If we step back and take a more macro perspective for the U.S. as a whole, and if we benchmark where we are today relative to the same point in time in previous cycles, the volume of new development activity today is about 2/3 of what we would expect. Part of that, we think, is explained by the lack of pricing power, the slow recovery on room rates. And Jack, I know, has done a lot of research in this whole notion of the relevancy of room rate levels in real terms relative to the economic viability of a new development. But another key factor has been on the debt side, and liquidity, and they're higher than normal, or what we usually see in terms of lender reluctance to get behind new construction projects. And Jack, I don't know if you want to speak a little bit to that in terms of the debt to equity requirements, and they're getting better, but that's been a headwind for developers.
Yeah, I mean, nationally, long run average supply growth has been about 1.9%, and we're still hovering quite a bit below that nationally. As Mark mentioned, there are selective markets that supply growth is exceeding their long run average, but in the majority of markets, we're still well below, even in some of the hotter markets.
Is there a couple markets that maybe are building too much to watch out for? You had any concerns over some?
The quick answer there is yes, and I mentioned Houston earlier. In today's environment, one can look at it and say there's absolutely too many rooms coming into the Houston market.
Yeah, Pittsburgh's another example.
And the reasons for those two are some of the same, some are fundamentally different. I mentioned on Houston. I think that the projects that are now coming out of the ground at the time that the commitment was made and the first shovel went in the dirt, people didn't know what was going to happen to oil.
Right.
And so the reality is it takes a long time to deliver a new hotel, and much can change in that period of time, which is all part of the risk of being a hotel developer. And that those developers in Houston are now having to deal with the reality is that because of what's going on in the energy sector, jobs are down, overall business volumes are lower than expected, and the demand isn't going to be there. So there's going to be a long build out.
But you know, within the same state, Austin is another market where there's a lot of supply growth, but it's being absorbed. There are a lot of people moving to Austin, technology companies, retirees, and so these markets come in two flavors: those that can accept the maybe oversupply, and those that cannot.
Is there a market where the performance is so great that there might be some opportunities to build in?
Yes. In fact, we have done an analysis that we're going to be releasing a little bit later on this year, where we took our market forecast, and we cover roughly 60 of the largest U.S. Hotel markets, and we know over the next 12 to 18 months what the supply change is going to be in each one of those markets, because it's coming out of the ground today, if it's going to be happening. Okay. So what we've done from a more of a theoretical perspective is we say, okay, let's ignore what's really coming out of the ground, but let's run our models to see what the supply change should be over the next 2 or 3 years, and let's compare what history says the supply chain should be to what the actual activity in that market is. And there's a good 12, 15 or so markets where it's clear developers are overlooking those markets. Now, as you would expect, a lot of them tend to be secondary, some tertiary markets, and they haven't been.
What's a couple examples, markets?
You're really going to have to pay me to answer that.
Well, I'll tell you one. I think Reno is a market that's going to
That's
really
an
boom
interesting
in the
one.
future.
Yeah.
It's way off the radar screen of most people, but there's a little battery factory going up just 20 miles east of Reno, which is going to be the largest building in the world. And it's going to have a sizable influence on that market.
How about Atlanta? Is there demand for new supply here?
Here's the expert on Atlanta.
Yeah, there's
every inch of the hotel market.
Well, I'm trying to avoid being the consultant that I am and start saying, well, it depends, Michael. If we look in certain parts of Atlanta, and I don't want to make it too much about our hometown here, but you look at the Georgia 400 North Corridor, it's booming. There's some hotel projects that are coming in there, but we think that there's going to be room for even more. Lots of interest in the Atlanta airport. And categorically, we've seen a lot of interest in airports around the country for new development activities. We've been fortunate to be working very closely with the Georgia World Congress Center here, and they're very interested in establishing some form of a public-private entity to help stimulate the development of a new hotel right there at the convention center. And again, we're seeing lots of that kind of activity around the country.
That's great. Now I want to get to one other question before you guys have to go back and be consultants and get paid.
There we go.
And
There's no check for this?
a lot of my listeners and viewers have some concern over the impact of rising interest rates. So for the people in the hotel industry, what might that mean moving forward if interest rates continue to increase? And I guess we kind of hope they do. I mean, we kind of hope the economy continues to build strength and that the Fed does continue to increase rates, hopefully slowly, but they do. So what's the impact on values in the hotel industry?
Sure. Well, let me kind of break this down. The nominal interest rate, the 10-year Treasury rate, for example, is comprised of two parts, a real rate and expected inflation. Expected inflation is real low. So any increase in that rate is going to be attributable to real interest rate movements. And we're below the long-run average in that. The cap rate's a much more complicated entity in the sense that there's NOI growth built in, there's risk premiums in the real estate markets built in. So I recently did an analysis using hotel cap rate data going back into the 90s, and my conclusion was that a 150 basis point increase in the nominal interest rate, the 10-year Treasury, would generate about a 50 basis point increase in the hotel cap rate. So it's not highly sensitive as one would think, even though nominal interest rates are the most important component of cap rates.
And part of that is explained, Jack, I believe, by the expectation that NOI growth is going to continue to be very attractive. So that strong bottom line profit lift is going to be enough to overcome a lot of the majority of any underlying interest rate
and it's going to be fairly a slow process of building up. So there's plenty of time, I think, for investors to,
and like you
to
said,
do things.
There's a lot of factors that impact cap rates, and one is the demand from investors to get into the space and their expected NOI growth. So with a 50 basis points difference in cap rate, you're expecting a lot more NOI growth than that over the next 2 or 3 years, right? So it offsets, so values should continue to improve, even though cap rates increase, right?
We believe so.
Yeah. Well, gentlemen, thank you. So you're a grandpa now?
Yes. Miller Preston, hopefully, he's listening, but he doesn't know what it means, so we'll teach him. Yeah.
All right, gentlemen, thanks for joining us today. We appreciate you being here.
Okay, thanks, Michael.
All right, and stay tuned. We'll have more on the hospitality industry. I'm Michael Bull. This is the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit CREshow.com.